Pharmaniaga's independent auditor, Mrs. PricewaterhouseCoopers, has reported a material uncertainty that may cast significant doubt on the pharmaceutical company's ability to continue as a going concern. PwC, in its audit of Pharmaniaga's financial statements for FY 2022, indicated that at the group level, its current liabilities exceeded its current assets by 632.1 million, while at the company level, its current liabilities exceeded its current assets by 411.2 million ringgit. The group also recorded a capital deficiency of 227.4 million as at end December, according to the auditor. In the boss filing, Pharmaniaga says it expects to resolve issues related to the material uncertainty surrounding its ability to continue as a going concern by the second quarter of 2024. The group, which slipped into Practice Note 17 status in February after being hit by a 552 million impairment related to COVID-19 vaccines, is in the midst of formulating its regularization plan. According to Defence Minister Datuk Sri Muhammad Hassan, Pharmaniaga is expected to announce the plan to Bursa Malaysia in August. Last week, the group announced a private placement of up to 10% of its total issued shares to raise up to 44.54 million ringgit for working capital, particularly for payments to suppliers and trade creditors. It should be noted that Pharmaniaga's largest shareholder is Baustat Holdings, which is in the process of being taken private by Lembaga Tabung Angkatan Tentera. The government has agreed to provide relaxation in the procurement method for all small projects, including exemptions to Treasury Instruction 182 to all ministries, executing agencies up to the state and district levels, with a value limit of up to 1 million for minor maintenance and repair projects, the Finance Ministry said. Bernama reported that all federal projects that include maintenance and repairs worth 1 million can be implemented directly by the ministry and relevant agencies. This includes at the state regional level without the need to go through the technical department, including the Public Works Department and the Irrigation and Drainage Department. According to the MOF's press release, another relaxation is to create a project monitoring team either at the state or district level, with the involvement of several agencies' officials from various departments to help monitor the implementation of maintenance and minor repair projects to meet the set objectives. This relaxation is effective immediately until December 31st, 2023 to ensure that these works are completed within the current year. PM and FM Datuk Sri Anwar Ibrahim had during the Budget 2023 presentation emphasised efforts to speed up the implementation of the people's infrastructure projects, especially school and clinic projects. Meanwhile, MOF said the government also agreed to procurement methods for all maintenance and minor repair projects implemented by all ministries or user agencies up to the state and district levels. Apart from that, the government also provides financing facilities to contractors in an effort to increase the involvement of small contractors from various classes in the form of financial close. MOF says it will reveal more details about this program in the near future. Scientex's net profit for the third quarter rose 24% year-on-year to 109.8 million, driven by the group's property development business's higher progress billing and robust demand for new launches. The group's property development business saw a 48.1% year-on-year rise in revenue to 361.7 million from 244.2 million ringgit. However, quarterly revenue came in fairly flat at 997.1 million compared with 993.8 million the year before, dragged by lower contribution from its packaging division. Scientex still declared an interim dividend of 5 cents per share. Touching on its prospects, CEO Lim Peng Jin said that amid an increasingly challenging external operating environment, the group is focused on strengthening its fundamentals in its packaging division, enhancing operational efficiency and effectively managing operational costs and wastage. He adds that while global demand for packaging may continue to be affected in the near term due to operational challenges and uncertainties, Scientex is cautiously optimistic of relatively stable performance for the current financial year. Meanwhile, on its property development business, Lim says the group anticipates strong demand for its affordably priced properties and will continue to launch new phases of development. As at end April, ongoing development projects amounted to 3.7 billion in gross development value, mainly consisting of affordable landed residential properties. Main market-bound property developer Skyworld Development is looking to expand to Vietnam within the next 3 years. Speaking at the press conference held after the launch of Skyworld's prospectus for its upcoming initial public offering, founder and non-independent executive chairman Datuk Sri Ng Tien Ping says its ultimate goal is to be a regional player. He explains that Skyworld has been eyeing Vietnam for about 3 to 4 years, but still has yet to acquire any land. The developer wants to start with a small project in Ho Chi Minh City. Ng says the appeal comes from Vietnam's urbanization potential, adding that the developer is open to either outright purchase of land or possibly entering into a JV with a Vietnamese party. Back at home, Ng says that the company is also intending to expand beyond Kuala Lumpur into other areas within the Klang Valley such as Subang Jaya, Petaling Jaya, Selayang and Ampang Jaya. Skyworld is also planning to launch 10 new developments by 2026 with a total gross development value of 4.08 billion ringgit. Skyworld is due to be listed on the main market on July 10th at a listing price of 80 cents per share. Of the 166.4 million raised from this exercise, more than half will go towards land acquisition, with another 20% set aside for working capital for project development. Kenanga IB is the principal advisor, underwriter and placement agent for the offering, while Newfields Advisors is the financial advisor. UWC, which provides metal fabrication and value-added assembly services to the semiconductor industry, has posted its lowest quarterly earnings since its main market debut in July 2019, with a net profit of 4.72 million for the third quarter of FY 2023. This represents an 84% dip from the 28.7 million it posted a year ago, as revenue almost halved from 87.3 million to 47.7 million, its lowest since the first quarter of FY 2020. According to UWC, the softer numbers was due to macroeconomic headwinds, especially semiconductor market cyclical downturn. Moving forward, UWC says that it still maintains an optimistic outlook towards both its business and the industries in which it operates for the coming years. UWC elaborates that it has ventured into business for 5G network equipment, autonomous vehicle-related chip testers, as well as EV battery cell emulators projects. The group says that as more front-end semiconductor manufacturing-related projects are in the pipeline, it is actively working with potential customers for project transfer in the coming years and remains optimistic in securing orders from these new customers.